Hi everyone, it's Suzi Beaver here on Brick by Brick Building Homeownership. Today, we're diving into refinancing strategies for 2026 because who doesn't want to save money and build wealth smarter? Let's talk about that. If you've been holding off on that refi, 2026 might just be your year. With rates potentially dipping a bit more, it's time to get strategic. I'll show you when to act, how to squeeze out savings, and some real life wins. Stick around. This could put hundreds back in your pocket each month. And if you're new here, hit that subscribe and that bell for more tips on owning your dream home. Let's jump in. All right. First things first, what even is refinancing? It's basically swapping your old mortgage for a new one, usually to snag a better interest rate, change your loan term, or pull some cash out for your home's equity. Simple, right? Now, looking ahead to 2026, experts are forecasting that mortgage rates could average around 6%, down a touch from 2025's roughly 6.3%. Some optimists even see them dipping into the high fives by year end if the economy cools just right. That's based on Fed moves and inflation trends. Think gradual cuts if things stay stable. The pros: lower payments mean more breathing room in your budget. Or you could shorten your loan term and build equity faster. That's your ownership stake growing quicker. Plus, with home values expected to rise 3 to 5% in many areas, your equity could be a gold mine for upgrades and investments. But hey, it's not all sunshine. Watch out for those closing costs, which run 2 to 5% of your loan amount. And you'll want to calculate your break-even point. How long until those savings cover the fees? Aim for at least a 0.5% to 1% rate drop to make it worthwhile. Using our HomeBot app, there's a calculator on there. You can plug in your numbers or just give us a call and we'll help you to do that. If rates hover around 6%, like many predict, this could be a sweet spot for action. Not as low as pandemic days, but way better than 7 to 8% peaks that we have seen. Bottom line, refinancing in 2026 isn't about chasing the lowest rate ever. It's about smart timing of your situation. Let's get tactical with my top strategies tailored for next year. We'll keep it real and actionable. Strategy number 1. Your rate and term refinance. This is your classic play. Refinance to lock in a lower rate and tweak your term without touching your equity. If your current rate is 7% or higher, and 2026 brings us down to 6% or below, go for it. Your monthly payment could drop $200 to $300 on a $300,000 loan. When to pull the trigger? Monitor rates weekly. In a declining market, act fast before they tick up. And boost your credit score now for the best deals. Strategy number 2, your cash out refinance for building equity. Love this one for you go-getters. You refinance for more than you owe and pocket the difference. Perfect for consolidating high-interest debt or home renovations that boost the value of your home. In 2026, with values climbing, you might tap 80 to 90% of your equity safely. You can pay off those 20% credit cards with a 6% mortgage rate. Bam! Instant savings. Just use it wisely. Don't blow it on vacations. Strategy number 3, shorten your loan term. Switch from a 30-year to a 15 or a 20-year mortgage term. Yeah, payments will go up a bit, but you'll slash total interest and own your home outright sooner. This is ideal if your income's steady and rates stabilize around 6%. Mindset hack. Think of it as a forced savings. You're building equity like a boss, setting up for retirement or that dream flip. Strategy number 4, streamline refinances for FHA, VA, or USDA loans. If you qualify, these are gold. Less paperwork, no appraisal sometimes, and quicker closings. Watch for program updates in 2026. They might expand eligibility for first-timers or veterans. These aren't one size fits all. Chat with a pro like me to customize your refinance for your best solution. Nothing hits home like real stories. I helped a client last year refinance from 7.5 to 6.25%. They shaved $300 off their monthly payment. Another client I helped was a family who did a cash-out refinance to renovate their kitchen. Equity jumped 15%, and they're building wealth while enjoying their space. If rates rise instead, no panic. Consider a HELOC for flexibility or wait it out. The key is mindset. Refinancing isn't just numbers. It's about creating security and chasing your dreams. You're not just paying a mortgage, you're investing in your future. Brick by brick. In 2026, time your refinance right. Pick the strategy that fits your goals and watch that equity grow. Whether it's lowering payments or cashing out smartly, you've got this. What's your refinance goal for next year? Like or share with a friend who's house hunting, and subscribe to Brick by Brick Building Homeownership with Suzi Beaver. Today our scripture is Luke 16:11. So if you have not been trustworthy in handling worldly wealth, who will trust you with real riches? Remember, you work hard every day for every penny that you make. Refinancing when it's the right time for you makes sense. All it's doing is saving you your hard-earned money. Be sure to give us a call if this is something that we can help you with. We've got great programs and alternatives. Remember, be sure to like, share, and subscribe. This is Suzi Beaver with Brick by Brick Building Homeownership. Until next time, see you soon.